Okay, welcome to Swing Trading with Cycles. We're going to do an update on the broader markets today. The S&P 500, QQQ, which is the Nasdaq 100, IWM, which is small caps, and DIA, which is the ETF that tracks the Dow. And I'd say just in general, where this goes is going to determine the trend for the broader market. So always important to understand, where for everything else, like whether you're a specific uranium person or precious metals. I know everybody has their sort of asset of choice in some sense. So we'll start with S&P 500, and it is November 21st. It's about 11:30, so live market action. I'm usually not able to record during the day, but I will be able to for a little bit now, so I'll take advantage of that when I can. And so we had that high on day 23, which is potentially our daily cycle high, and then this is day 24. Day 25 is now a swing low as of the Friday close. It's an ugly doji candle, but as we talked about, or I think I mentioned in that video or in a tweet, once we crossed above the high from Thursday, right, that gives us a swing low. That high, and this is the S&P cash, that high is 39.54.33. So we're obviously below that, right? We're about 10 points below that now. So that will be an important level to watch. That's the daily. But and another thing to note on the daily is we didn't actually get to close this gap here. That was right above this high where we topped, which is not actually surprising. And the other thing that I will note, it's important to just like, you wanna make sure that you're like paying attention to market structure so that you're getting a sense of what might be developing. So when we did this, then we did this, and then we did this, it certainly looked like we were going to do something like that and then that, right? That's obviously not what played out. We continued up. In fact, we gapped up. And now we're doing something like this, right? And now do we do something like that, right? Now, again, that didn't play out here. And so it's like, well, why would it play out here? The point is, this is your setup for a lower high, right? Like this is your lower high and then your lower low, like in the way markets trend, right? In the same way that this kind of set you up, like, oh, okay, maybe we're going to bounce up, not be able to get out of this range. Instead, we kind of gap up the next day. Obviously, that was CPI specific. And so we're going to see where this develops. More importantly, if we look at the weekly, we're just an inside week right now. That's important. So last week's range, the high was 4,028.84. So call it 4,029. The low was 3906.54. So that's a pretty big range, obviously, right? That's over 100 points, right? And so we're right here, basically kind of in the middle of that, 39.46. So when we get closer to 3,900, you would expect we get maybe some kind of bounce there, at least some reaction. And obviously, you know, that 45, a little bit over 44,000 has been trouble for the market. As you know, it looks like it's clearly trying to make a move up here to the 4,100 area. And if we can get through that, maybe even 4,300. That doesn't mean the lows are in for this, you know, sort of bear market or downtrend, whatever you want to call it. But that's what you want to be paying attention to, those weekly levels. And that's for the understanding of like, where is the market going to go the rest of the year, right? And the other thing to keep in mind is that last week was week 5. This is week 6. And so if we do fall below the low of last week, that creates a weekly swing high on week 5, which would be bad news bears, right? This was a weekly swing high on week 5 back in March, right at the end of March. And that led to our weekly cycle decline, right? And so if we're topping out here on week 5, that would be pretty bad. It definitely seemed like we were going to continue to make higher highs, at least for a few more weeks. I mean, look at this move. It lasted 9 weeks and we still kind of rolled over. So you can have a rally that's 7-8 weeks and still roll over into a lower low that continues a downtrend. So that's your weekly. And then most importantly, your monthly. So we only have, I mean, this is a short week and we have a couple days tomorrow. So we don't have that much time left to trade in the monthly candle, but it's now turning into a bit of a doji. Do note that it opened at 39.0179. Always incredibly important to know where the candle opened, because below that opening price, it's red, and above that opening price, it's green. That's important. If something is red, it means it's moving lower by definition, right? And so if we do notice how those levels kind of coincide, we talked about how we're in a range where 3,900 is sort of the lower end. If we get down there, that means the monthly candle goes red. And we're obviously going to close the month pretty soon. So it's unlikely, I'll get rid of these levels. It's unlikely that we're going to make a new low for the month, right? Like that's, I mean, obviously anything can happen, but the chances seem dim. We could make a new high, that's possible. But all things being equal, if we just kind of chop around inside this range for the next 4 or 5 trading days, right, and the month closes out, our next candle would open inside the range of, to be clear, the December candle would open inside the range of the November candle, right? And it will be just really a question of how far, closer to the lower end or closer to the higher end, depending on how we trade the rest of these few days. And again, that 3,900 level becomes a real pivot point because, again, it's below that level. You're now red on the monthly chart. And what you're doing, what red on the monthly chart would suggest, right, is a continuation of the downtrend, right? So in the same way we talked about the lower highs on the weekly, that's your lower high on the monthly, right? That's your lower high on the monthly. And so you create a situation where this could become your lower high on the monthly and then down to lower lows, right? And you could, again, this is going back to that broader point, you could still rally here, right? Like you could go up to here even, right? And then still roll over. So you could still get upside and then still roll over into a new low in the low 3,000 range, maybe even break 3,000, who knows? So that's the context there. And so I'll go through the other indices, and they're in very similar position. So I won't go through them in incredible detail. So the Qs, same kind of idea. In this case, we're getting closer to already confirming that downtrend, right? You see, we made that move, that lower low, lower high. This thing wants to break that low, right? And once it does, we're now in a downtrend on the daily level. Again, it's bacon got saved by that gap up CPI day, but this is the start of a downtrend potentially. Again, so in this case, that level very clearly structurally is 280.72, right? So, I mean, not very far, just $2 below here. And on the weekly level, it's the same situation as the S&P, except we're actually much closer to the lower end of the range, aren't we? That's not good, right? Which speaks to that, breaking that pivot on the daily. It's all connected. That's the point of the multiple time frame analysis. This pivot here is your weekly low. And so that sets you up for a situation where, again, the breaking this low also breaks your weekly low. And the monthly situation looks even more precarious. We opened at 281.50, so we're about like $1 above where we opened. So the monthly candle is about to go red, go from green to red. And you can see we're going to open an inside candle similar to what I drew for the S&P. IWM, well, look at that. I think it might have already been red last time we revisited. We looked at this as well. This is already a red candle. And again, just to kind of draw it out for you, you have this low, this lower high, this low, this lower high, this low. And now is this our lower high onto a lower low? That's the question. That's the implication, right? And let's see, the weekly, same position. Again, so similar to the QQQ, IWM is much closer to the lower end of the range versus the S&P, which is more, sort of in the middle, if you will. And finally, the Dow, which has actually been the strongest of the bunch, right? So the Dow, notice it's much further above that pivot. See, they're all doing the same thing in terms of the pattern. And you can see that, right, so it's closer to the upper end of the range on this weekly, but not by much. So definitely bearish bias here, though at this point we're kind of still chopping a little bit, so it hasn't kind of picked a direction, but the levels are very clear, and that's helpful. And of course we know oil is down big. I think precious metals are down as well. I'll do separate videos about those. Definitely check that out. But we'll leave it here for the broader market update.